Every financial market throughout history, going back thousands and thousands of years, runs through this very same emotional roller coaster, starting from the anger and depression stage, running up into hope, optimism, belief, and then finally into euphoria. After which you get a first severe correction, which leads into a complacency bounce. Finally, you get the anxiety, denial, capitulation, and the cycle repeats. And within these cycles, you see particular commodities play out differently. Some are going up while this cycle is happening, others are going down. The majority, of course, are all going up, but there is one in particular that sometimes plays a little different to these rules. This is Bitcoin's first 18-year cycle that it is going through. Now, if you're unfamiliar with the 18-year cycle, don't worry, hit the subscribe button and like the content if you are familiar with it. It's something that we focus very heavily on here on the channel, along with Bitcoin, cryptos, the stock markets, and of course the real estate cycle, which is our 18-year cycle. So with that in mind, let's dive in and have a look at how this collapse of the commodity may affect Bitcoin in a positive way, along with real estate and the stock market, as we fire up into the winner's curse phase, leading into the end of the cycle before a collapse. Let's kick off with the market sentiment, as that's what I did in the intro, just looking at the emotions of a market. Fear and greed, short-term analysis for the stock markets before we get into the longer-term analysis here for Bitcoin and the stock markets, of course. The fear and greed index is at 25. Now I'm bringing up the short-term analysis because what I'm going to show you takes months. And you've already seen some of it take months to play out. So I want to make very clear that although we see day-to-day actions in the market, like we saw on the weekend with the Japanese carry trade dropping into this low and now the market recovering for several days, you may see ups and downs and sideways and in between, but the overall trend is what we are focused on here. And I find it so important to focus on this because throughout this movement of a huge bull market, raging bull market for years upon years, the masses expect collapses almost every single day. And so if you have been following the channel for some time, you know that we focus on the bull market because the bull market is essentially where you'll be making most of the money because most of the time the markets go up. And there are some specific times where they don't, but of course the overall trend of real estate, of the stock markets, of Bitcoin is that it goes up. And the difference is where the volatility comes from within those drawdowns. Of course, Bitcoin has far larger drawdowns than something that has been around a lot longer than like the stock market or real estate. For cryptocurrencies, it's also in fear. Bitcoin and cryptos, it's still sitting at 30. The day before was 31. Last week, 29. And we have seen some extreme fear dropping down as far as 17 on the reading here as well. So these are pretty good signs near or at the lows in the market. And I say near or at because you never know for sure, is this going to be the exact low? Or could the market go a little bit lower like we saw in October of 2023? There was a drop in July to these lows in August. There was a recovery. There was a slightly lower low here in September and October. And then you had this final washout in late October before the market rallied and rallied very, very hard from that point. It caught a lot of people off guard with very shallow corrections along the way. Now, I also talked about corrections. One in particular that we look at is a 3-day down rule. So this one is an exclusive TIA indicator that you can find here with the TIA Gann swing indicator. Now, you might recall that I brought this one to you on the channel when we looked at Bitcoin back in March, and that signal also came up for BTC on the daily chart right at the top, 3 days down from the specific top. Now, it's important to understand how to use a rule. I've seen many people try to apply it at different stages of the cycle, and that's not the case. You need to use it at specific times to get a very specific result. And at that time in March, we looked at this rule right at the top and said, the market is likely to be underneath the old all-time high for 4 to 6 months. You're probably getting sick of me hearing that, or if it's the first time, there you go. And so far, we are in our 5th month underneath the old all-time high. Now, that rule also showed up at the top of the S&P 500 before the Japanese carry trade happened. Now, I'm not saying that I know what happens in the economy, and that I'm some Nostradamus to tell you that the Japanese carry trade was going to collapse the market. However, there were signs that the market was likely to be going to be underneath the old all-time high for longer than other times previously in this run up, based purely on this particular signal used at a specific time. Now, fortunately, if you were watching the channel, hopefully you were subscribed here, maybe you liked the content as well, you're able to see this signal in the market that we're going to see further downside, or at the very best, maybe a consolidation here at higher prices, but no new higher prices. And that's what this signal gave us here. Now, you can use this on any other market, provided you understand how the tool works and you can apply the tool yourself. Now, if you want this tool automated on your chart with the Gann swing indicator, you can check out our absolutely brand new TIA indicator suite that is being released this month. There's plenty of other features that are being rolled out in our new TIA indicator suite, like the forward returns table that you might see me use here on the channel, or even the predictive cycles. This is something that we've used for many years, and for 2023 was something that helped us identify the trends in the market to suggest that we were not going to see a recession, that we weren't going to see a correction or collapse in the market, and that we were going to see higher prices by the end of the year. So if you want to be notified when these new features go live this month, including the predictive cycles and the forward returns here, make sure you are subscribed to the free weekly report. So back to the charts on the S&P 500. In the short term, we've got some short-term strength, above 50%, above some of the swing bottoms. However, multiple closes are needed to confirm this strength. So in the meantime, anyone's guess. We could see further downside from this point just based on the lack of data so far. Next up is the seasonality here. So just taking a look at the NYSE, basically the volumes on the seasonal pattern here. We know over the course of July and August, sometimes even the first half of September, you get a bit of a summertime trading lull where there is less volume in the markets. Therefore, it's easier to manipulate price and push the price in the direction of the trend. And in this case, the direction of the trend was down, as we saw in mid-July. And with the lack of volume at the time, you got this extra run to the downside, which of course at the time then increases the volume towards one of these specific lows. Now we're seeing that rally out of the low with lowered volume. Again, going back to the summertime trading lull, where you basically have less volume across the NYSE, less volume across the NASDAQ, and you're just basically waiting out the summer period. After that summer period, you're looking towards quarter four. Quarter four is where things get quite interesting. As for Bitcoin, things did get quite interesting in quarter four of 2023, basically going back last year. And it was the same sort of summertime lull. You saw a peak in July, barely, and then the market die off for August, correction down to 25K. September was another consolidation here before it broke out in late October. And so we find ourselves in a pretty similar position here. And I would say that if you're seeing a lull in trading volume across the US stock markets, possibly it's for a similar reason that you might see it on Bitcoin, even though we can get some volatile moves here, like going from 70K down to 49K in a matter of days. In the short term, Bitcoin still hasn't done enough to get above 61,500, but I just want to draw our attention to the longer term yet again. The longer term trend is obviously still up. Bitcoin's price is still sitting above our bull market support level, and that level is the 50% level of the entire bull market thus far. 44,600. Round numbers, you could say 44.5, you can say 44.7, whatever it might be. It's still not below that level, and recently came back to test 49K, which was the ETF top. So again, I just want to draw our attention to the longer term here as we look at Bitcoin and look at the collapse that is happening on this commodity, being the US dollar. And now when I say collapse, I don't mean the US is collapsing. I don't mean the US dollar is over. Nothing like that whatsoever. So let's just clear that one out of our minds so we can focus on the analysis at hand. You might remember I had this chart here as well, so our 18-year cycle. Within the 18-year cycle, you've got 14 years up, 4 years down, as you can read from the bottom here. Typically, in this second half of the cycle, when the markets are going a bit crazy towards the end, higher prices that is, and more volatility is in the market because of these higher prices, and towards the end of the cycle, you'll typically see the US dollar correct. Now, it's not just a straight down move, which is why I've tried to explain in the intro, basically the build up within the psychology of the market and how the correction can unfold. So I go back to the intro here, you can see euphoria and complacency. US dollar might be on that path at the moment. You got this big move to the peak. This might be the complacency. And the time for the confirmation of that will come when the US dollar breaks down from roughly 100 on the index here. So that's the first thing I want to note. We've had a reasonable run up for the first half of the real estate cycle. And there is a real estate cycle there from roughly 2011, 2012. You can see here on the low 2011, and then you got the first half running out. A mid-cycle slowdown, doesn't need to be an absolute crash, but just basically a mid-cycle slowdown, somewhere around 2019, 2020-ish, and then you run up into these last years, maybe another 5, 6-ish, 7 years from those dates. So over to the US dollar again, and how is this all affecting BTC? Well, I wanted to show you how this happens in basically every single cycle that we have data for on the US dollar. So going back to some of these lows here and taking a look at that, you've got the bottoms here, 93, 75. They're the ones we have here on the chart. So 75, roughly around here, that's the bottom, market running up. And then towards the second half of the cycle, it runs down. So you can see a peak somewhere in the mid 80s, and then it runs down into the peak of the next top. So roughly around 1989, 1990. Where is it? There's 87. There's the next bottom, roughly 91. And then your higher low in 92. So you come back to this low here, 1993. So there is your low, and it takes many, many years for the market to find its footing again. You have this move up and then a correction. So where does that move up last? Well, it comes into the mid-cycle peak of the bottom from 93 into that next top, roughly around 2000, 2001. Then you have the mid-cycle slowdown and a correction that runs into that final peak. And that final peak was roughly around 2006, 2007. So does it show up on the US dollar chart again? Well, here is your mid-cycle. The US dollar corrects, and it keeps coming down into roughly there, about 2008. So again, for the second half of the cycle, the US dollar was weak. The first time, it was weak here, and it was very weak indeed, going from 155 all the way down to roughly 85 at these lows here, about 80. So a very, very big sell-off. So that leads us to the present day, before we can get into Bitcoin and how this is overlaid for BTC. Starting from these lows, you got 2008, you got another low here, 2009, where the stock market load, and then you've got the next low here, a slightly higher low in 2011 that led into this consolidation here of 2012, 2013. So what does that line up with? Well, we know the low is roughly 2011 to 2012. We've talked about that many times on the channel. I haven't written it here, but it's basically 2011/2012. So on the US dollar chart, you can see the cycle low here forming around those lows of the stock market and the real estate cycle and the economic cycle. And then the economic activity picks up in the US, and you have this US dollar running up into its peak around 2022. So there was a first peak there of 2020, correction, and then a big run up before we've seen this correction here. So this time round, there's the mid-cycle roughly around, as I said, 2019, 2020. The US dollar kept running up into 2022, and like I could see from the previous cycle, sometimes it takes multiple years to come to a peak before that correction. And it seems like we are now in that trend. You can see that the peak has happened, waiting on confirmation to break down underneath 100 to 102. But at the moment, we're almost on that very edge of the US dollar correcting for this final leg of the 18.6-year cycles bull market phase. So that first 14 years to the upside. So what might that look like on the US dollar chart? Well, I think it's going to break down from 102. It's not a far-fetched to say that now. However, in 2022, it was a far-fetched to say that. And we said that at the time there when we looked at the top being in, everyone was ultra bullish on the US dollar, and it peaked basically the next day. Some of you guys might remember that. That was back in September of 2022. I've got videos on the channel talking about it. I heard everyone talking about why you should be in the US dollar and not in the euro or in the pound. And that was the peak. Next up, we had these ultra bearish news items at the lows here in March 2023. There was a quick spike down, and then the market, well, the US dollar actually has been basically trying to consolidate here for many, many months, almost 2 years now. That news, the ultra bearishness, was the US dollar is going to collapse. BRICS is going to take over. Malaysia, China, Russia, they're not using the US dollar anymore to trade. All this sort of news, and the US dollar did not go down any further from that point. Now we find ourselves at the edge of that move again, testing the old 102 level. So what I think happens next is a breakdown of this level. How far down do we go? I'm not sure yet. I'm not ready to make that call because I want to see what the weakness is like. The main thing is I think we're going to see the US dollar come down. It's got some support back at sort of 88 to 89, so they'll have that level to contend with on the way down. But over this course of the cycle, I suspect we'll head down. And then once it finds a low, like it did in the previous cycle, it will go on a bit of a consolidation range. And that could take many, many years. And during that period of the consolidation, it's somewhere around this period and this period here, basically the collapse of the markets and then the real estate and the economic cycle finding their lows before they start to head to a higher low, as they have done in each of those cycles. We've had a look at the broader picture here, the macro cycle. I don't know what's going to happen day to day. I'm just looking at what I think is going to happen over the next 6 months, 12 months, 5 years in terms of the US dollar and the real estate cycle. That can lead us to Bitcoin right now. And I've labeled here on the white, you've got Bitcoin. Then you've got the background here of the red lines are where the US dollar has corrected and done so pretty significantly, or at least the trend has stopped and it's gone sideways. And in that case, Bitcoin has been running up. The white lines show where the US dollar has gone on a significant run, and typically through those times where the US dollar has gone on a significant run, Bitcoin has not, and Bitcoin has corrected quite heavily. Now, I understand it could be easy just to say, well, look at this. The US dollar went down, Bitcoin went up. The US dollar went down, Bitcoin went up. But I think it's way, way more important to explain how this is happening through the macro cycle, as we look at here with the 18-year cycle, because the Bitcoin cycle is way too short to just say, every time the dollar does this, Bitcoin must do this. There's something bigger to it. There's a bigger picture to this. And I know I'll probably get roasted in the comment section from someone saying, well, it took you 20 minutes to get to this point, but personally, I don't care. I think the majority of people prefer to understand the hows and the whys as opposed to just give me the answer. And then for those people who just want the answer, I mean, I'm not the person for them. I like to explain things and understand how it got there because that's how I learn myself. So I hope you appreciate that as well. And you can keep coming back to this video and just reviewing this particular section for your own future benefit if you choose to be an investor longer term, as opposed to the altcoin season degenerates, which essentially are here one day, gone the next, and never really learn a lesson from the market at all. Let's have a quick look here at the movements themselves. So you've got Bitcoin's beginning cycle here, basically from 2010. The US dollar was still trying to find its legs. You got the consolidation, and by the time it found its low, Bitcoin had already done its first pump into 2011. You had the correction here and the US dollar went on a bit of a rise. Now, it's been said many times before that if the US dollar is weak, then asset prices are going to be strong. And if the US dollar is strong, then asset prices are going to be weak. And that's really what it looks like here with Bitcoin. But if you were to understand how this overlays with the 18-year cycle and then how the stock markets will overlay with the 18-year cycle and then how Bitcoin overlays within the 18-year cycle, maybe that will give you an edge come the end of this cycle. What happens at the end of the cycle? Typically, there'll be a longer correction. It could be a bigger correction. It could be a bigger crash. It could be a bigger collapse. It could be a longer recession. If that's the case, and Bitcoin, or sorry, the US dollar is finding its legs here, basically range trading, maybe that doesn't mean that Bitcoin is going to run into a new all-time high every 4 years, and it's going to take longer for Bitcoin to run up again. That is going to be your key takeaway. At least that's my key takeaway from understanding the cycle. I'm not going to get ultra excited for the next 4-year cycle until I see what happens at the end of this one here. Because if we are running into the end of an 18-year cycle, 14 years up, 4 down, it could mean that we are about to experience a bigger recession, something that might equal the GFC, running from 2008 into roughly 2012, 2011 there, as we can see from the bottom of the real estate and economic cycle. And if that's the case, Bitcoin might have another move to the upside. It might find a low in 2026, 2027, then have a run up there, but it might not be that big boom or takeoff. And that might have to wait until the next 4-year cycle when the economy has recovered and things are looking like they are improving. As a Bitcoin holder myself, I hope that isn't the case. I hope that we find a low at the end of the next 4-year cycle. And if the US dollar continues down as it has done with each of the previous 18-year cycle corrections, that maybe it's Bitcoin's time and it's able to find another higher high through that period of a collapse in the market. I hope that's the case. I'm not sure if it's the case because that's a long way out, but I wanted to share this with you today, just looking at how the US dollar has interacted, or how Bitcoin has interacted with the US dollar, and how the US dollar has corrected at every second half of the real estate cycle going back to the 1970s. So there's lots of uncharted territory for us as Bitcoin holders. So I hope you're able to gain something quite valuable from today's video, just taking a broader look at the macro cycle as opposed to the day-to-day moves. Overall, it looks like the USD is coming down. It looks like we'll see further higher prices for assets like BTC. What happens at the end of this cycle? I'm still unsure whether Bitcoin will go on another 4-year cycle run into a new all-time high after this one. So I still think there is a new all-time high this year or next. But after that point, maybe it's going to take an extra 4 years before Bitcoin can consolidate to get into that new fresh high. And that might take us into late 2020s or early 2030s. As I said, that's a long way out. We can speculate all we want. What is most important is what we see in terms of the price chart, and not to get too carried away with any sort of ridiculous price calls at the end of this cycle that we would most likely see from your Michael Saylors and your Cathie Woods and all those sorts of guys who look for $1 million and $2 million and $10 million Bitcoins. There is a bigger cycle at hand. There's a liquidity cycle out there. And of course, we just don't know what will happen at the end of this 18-year cycle, as this is Bitcoin's first 18-year cycle. So hit the like if you found some value from today's content and share it with a friend. Let me know in the comments section what you found valuable from today's video. And if you want to be the first to know when the new TIA indicator suite goes live this month with the forward returns and predictive cycles, subscribe to the free crypto and economic report. Thanks once again, guys. See you at the next video. Till then, take care and peace out.